ये ठीक है ना? अच्छा, okay. Is that okay? Can I start? Hello and welcome to this marathon coverage of the Make in India budget.
We've given hope, we've more to give, we've shown lives there is more to live. We will be the one, we will bless the sun. We will lead the way we have led. Triumphs behind, triumphs ahead. We will set aside, we will do it right. We will lead the way we have led. Triumphs behind, triumphs ahead. We will lead the way we have led. Triumphs behind, triumphs ahead. We will lead the way.
Good evening. Thanks for joining us here on India Business Hour. I'm Shireen Bhan, and history repeats itself yet again. CNBc TV18 has emerged as the undisputed market leader yet again for the 15th straight year. We are number one on Budget Week as well as on Budget Day. CNBc TV18 dominates Budget Week with 3 times more market share than ET Now. Our share is 64% versus ET Now's 18%. And on Budget Day, CNBC TV18's market share is 58% versus 22% for NDTV Profit and 16% for ET Now. In fact, CNBC TV18's Budget Day market share is greater than all English business channels put together.
And we take this opportunity to thank all our experts and our viewers for staying with us through the last 15 years. And you know, Shireen, the devil is always in the details. So while our competitors might claim to be number one, is for an age group of above 15 years. Ours is for across India for 25 years and above. So
that's what matters.
That's what matters. You take a decision on what's more relevant on Budget Day.
Well, here's a quick look at the headlines that we're tracking this evening.
We are hopeful we will get all of this done by April 1, 2016. That is our absolute steadfast commitment as well.
What's the backup?
But no, I think, if it slips or anything would happen, again, there's no need for a backup because we'll keep pushing, of course.
The Minister of State for Finance, Jayant, admits that meeting the April 1 deadline to roll out GST will be a tall ask. Also says the RBI rate cut is a vote of confidence for the government's fiscal consolidation roadmap. Hopes investment cycle will turn around this year itself.
After a big bang, day 1 demand for spectrum fizzles out on day 2. Government receives bids worth just 5,000 crore rupees. Total bids now stand at around 65,000 crores. The 900 megahertz band sees a lot of traction with bids coming in about 45% of the reserve price.
The second round of the coal auctions also on in full swing. Tirumala Industries wins the Miral mine in Jharkhand. Mandakini Exploration wins a mine in Odisha.
Yet another volatile session on the Rollout Street. Markets rise in the last 1 hour of trade, with major indices ending with marginal gains. For the week, Nifty's up 0.5%. Mid-caps have outperformed, rising nearly 2%.
The European Central Bank will kickstart its $1.1 trillion quantitative easing program this Monday. Also raises the growth forecast for the region. European markets per cap in trade. Wall Street also rises.
More unseasonal rainfall could spell more trouble for Rabi crops. SkyMet predicts more rains on the 8th and 9th of March. Expects the winter to prolong till the start of April.
India's top IT companies raise the red flag. Infosys CEO Vishal Sikka says initiatives will take a long time to bear fruit. TCS expects to get hit by currency headwinds, and Wipro says demand remains volatile.
More trouble brewing for Sahara. Sources say the company sold an aircraft in December last year without intimating the Supreme Court. Used the sale proceeds as security to seek a loan from Merak Capital. That's an exclusive.
BBC snubs India, sticks to its editorial stance and airs the controversial Nirbhaya documentary. In the UK, the government threatens to take legal action. YouTube blocks access to the film after pressure mounts from India. Well, there has been one constant on the last street this week. Volatility shares saw some wild swings once again, but today we did manage to end in the green. The Sensex shot up in the last hour of trade, gaining nearly 70 points. Ditto for the Nifty, which added about 15 points. The mid-caps continue to fare better than the blue chips, with the index gaining nearly 1%. For the week, the Nifty and the Sensex closing with under 0.5% gains, and the mid-caps outperforming, rising nearly 2%. But there is no dearth of optimism among market watchers. Many expect the bulls to shatter records continuously.
I think it will be higher. If you were to give a date like December 2015, I'd say it would be at 33,000 because that's my target. But I think we'll be somewhere between where we are today and 33,000 6 months from now. I think if you were to look at the pure benchmarked people, I think I'd be surprised if there's too much more allocation because they're already sitting 400 to 600 basis points, overweight.
The range has definitely moved higher, so 8,700 and probably a final bottoming out on the downside at 8,500, which we are looking at a big move in the markets globally. We're looking at some unfavorable data coming out in India and all of that. So any of those surprises, and we probably move to the 8,500 over the next 2-3 months. On the upside, like I said, 9,000 looks like a very strong resistance, and if we cross that, we could easily inch higher to about the 92, 9,300 odd level.
Well, that was the market action for the day and for the week. It wasn't just the equities. The rupee also saw some wild swings in trade today. The currency rising about 62.20 against the dollar in early trade, but then managed to recoup some of the losses and ended the day just about the 62 mark. But what about what rating agencies have to say, Nandara?
Well, Moody's has given a boost to India's sovereign outlook. In a statement today, Moody's said the move to target inflation is credit positive for India. Moody's believes the move increases policy transparency and predictability under the new inflation targeting mechanism. RBI is mandated to bring CPI to 6% by January 2016 and 4% by FY17. This comes days after rating agency S&P painted a mixed picture for India's sovereign rating.
Well, meeting the April 1st deadline for the rollout of the goods and services task will be daunting. That's the word coming in from the Minister of State for Finance, Jayant, speaking with me earlier today. Sinha also spoke about the RBI's out-of-turn rate cut, saying that the move is a vote of confidence to the government's fiscal consolidation roadmap. He's also upbeat that the investment cycle will turn around this year itself.
We have a very broad-based consensus there, and that consensus extends across different parties. So when we bring the constitutional amendment into Parliament, our hope very much is because of the consensus that we forged, the good faith with which we've negotiated the GST, that we will in fact get the two-thirds majority in the Lok Sabha and the Rajya Sabha to pass it. Our hope is to be able to pass it in the budget session itself. Because as I said, it is something that has very, very broad consensus attached to it, and therefore we should be able to move it through and get it done. But thereafter, what we have is a fairly complicated legislative process, because we have to then get 50% of the states to agree. Then the GST bill has to be passed in Parliament, which of course has a number of contentious, complicated issues attached to it. And then that same bill has to be adopted by the state assemblies as well. We are hopeful we will get all of this done by April 1, 2016. That is our absolute steadfast commitment as well.
What's the backup?
But no, I think, if it slips or anything would happen, again, there's no need for a backup, because we'll keep pushing, of course.
So if it were to slip the April 1, 2016 timeline, do you believe that we could see a mid-year introduction or mid-year rollout as
you're asking me to forecast the future.
No, I'm just saying, would that be the feasible or the...
No, but again, I just laid out the steps we have to take, which are very clear, and the sooner we can do the steps, the better off we are. I mean, maybe if everybody is really on board, we could even do it sooner than April 1. So let's see how it all plays out.
What about the rates? Because at this point in time, I understand that the revenue neutral rate is being reworked, so the hope is that it will be reworked and we will arrive at a more moderate rate than what was presented by the Empowered Committee. What would be an ideal GST rate? The global average is between 16 and 18%. That would be the hope for the GST rate in India. It's unlikely to be anything close to that. The rate for now is in excess of 24%, in fact 25 to 26%. What would be the ideal GST rate as far as you're concerned?
The ideal GST rate is the one that's revenue neutral, so that everybody's happy. That's the ideal rate. That's what we're working towards. But remember, I'll tell you...
But won't it 24, 25% rate backfire?
No, but Shireen, you have to look at it in terms of what it does to the actual price of goods and services. Because right now the problem is that we have a very inefficient sort of cascading tax structure, which means we have tax on tax on tax. When we take out a lot of these taxes, yes, it is true that you pay for it at destination, for sure. But because you've eliminated a lot of taxes along the way and you obviously avoided the cascading effect and so on, ultimately in terms of the price that the consumer is paying, we'll have to see what that all ends up being. But it could very well be quite reasonable. As far as the domestic data is concerned, you know, the big event has been obviously the budget and really clarification on what the fiscal consolidation roadmap is. When we had obviously said 4.1, 3.6 and then 3%, and there was concern about, you know, can you achieve 4.1 and what is the quality of achieving that target? And then thereafter, what are you going to do with the 3.6 and the 3%? So I think now that all of that has been clarified, some of that uncertainty on the fiscal side has now been removed. And I think that's created the space, if you will, for RBI to continue to bring rates down to a level that they think balances, you know, obviously the monetary stability side of the equation.
There's also speculation that perhaps this out-of-turn rate cut by the Reserve Bank has to do with the fact that there's a little bit of understanding and a little bit of give and take between the Reserve Bank and the Finance Ministry as far as the monetary policy agreement is concerned, which is a pretty historic landmark agreement. And the Finance Ministry seems to have accepted most of the recommendations of the Urjit Patel Committee report. How much of this has to do with the fact that you seem to have taken that on board?
Well, I think, as we've discussed many times before, Shireen, the RBI is a very professional, data-driven organization, and I'm not sure that's the data that they use when they think about where rates are going.
One of the other critical things to focus on as far as execution in infrastructure is concerned is to be able to revamp public-private partnership. The Finance Minister spoke about that, but the Cabinet for now has decided to defer the decision to operationalize 3P India, which was a promise made in the previous budget. Can you explain to us why is that and what kind of revamping of the public-private agreement are we really looking at? Because if I were to take into consideration what the Roads Minister, for instance, is doing as far as road agreements and road public-private partnership projects are concerned, where he has said that you need to de-risk these projects and hence the government will have to provide almost up to 40% equity. Is that the model that we're going to be following as far as other infrastructure projects are concerned?
The fact of the matter is that when it comes to PPP projects, we have inherited a whole host of projects that are right now stalled and in trouble, etc. And as we work through them, we begin to have a better understanding of what it will take, first of all, to get these stalled projects moving, and secondly, if in fact we are to start new projects, how those new projects should be put together. So really what we are learning now, and which is reflected in the budget language as well, is that there is a need both to have new and fresh capital coming in, which is the National Investment Trust and so on, and then also a new approach towards these PPP projects where perhaps the sovereign takes on more of the risk and so on. So because we are working through all of these right now, as we're getting our hands very dirty in dealing with all of this, it makes sense to take a step back and really think through what's the right way to move these projects
So when
forward.
will we have clarity on what the reworked PPP model is likely to be?
Well, wait and watch. I think again, as I said, it's very important to get the investment cycle moving. This is something that's a very high priority.
But is it going to be specific for specific sectors, or do you believe that there will be a model framework which will be sector agnostic?
No, I think part of what we've learned is that the sectors have to be different because the issues in each sector are actually quite different. In some cases, we have fuel supply problems. In other cases, we have land acquisition problems. In other cases, we have financing issues. So in each sector, because of the nature of the sector, so roads, there's almost always a land acquisition issue of some sort. Obviously, in power, we've had the fuel supply challenges and the rate agreements, etc., that have been quite challenging. So in each sector, we find that it's a little bit different, and therefore, I think that one-size-fits-all type template is probably not going to be as effective as taking a more customized approach to it.
Let's talk about roads in specific, because you've set out a very ambitious target in the budget as far as roads are concerned. The Prime Minister in Parliament said that you've gone up from about 5 kilometers a day now to 10 kilometers a day. The Roads Minister set a target of 25 kilometers a day. It is an ambitious task, but do you believe that without the requisite clearances as far as issues like land, for instance, are concerned, or being able to get the private sector on board, these kind of targets are going to be realized?
Obviously, the land acquisition bill is very important in that regard, but I think the Honourable Transport Minister has been very clear about his determination, and he is working very, very hard to ensure that many of these stalled projects are actually executed and get the attention that they deserve. So I have a lot of confidence, in fact, and everything that we are hearing here in the Finance Ministry is that these projects, in fact, are moving forward. And that's exactly why in the budget we have significantly increased
the allocation
as far as roads are concerned.
You've also significantly increased the allocation towards the railways. How soon are we likely to see things move as far as railways are concerned? Several promises that the railway minister has made. Bringing private players on board as far as station redevelopment is concerned. Of course, FDI has not been talked about in the budget. They've talked a lot about multilateral agencies funding. They've talked a lot about partnering with governments and so on and so forth. Is FDI a bad word in that sense, even though 100% has been allowed as far as railways are concerned? But are we shying away from private FDI?
I think the Honourable Railway Minister has been very clear about his priorities. The railways have been chronically starved of investment for quite a long period of time. And as a result of that, there is in fact a whole list of very high return projects that are available there in terms of getting going and being shovel ready and really moving forward very quickly. And so the 1 lakh crore investment plan this year, of which hopefully 40,000 crores or so is coming from us, is something that will move forward very, very quickly. And there are different nuances there. There are different types of projects. Some, of course, are pure railways. As the Honourable Railway Minister said, when it comes to stations, that's obviously an area where there can be, in fact, terrific public-private partnership, and he wants to do it in a very transparent and clear manner. So I think as far as railways are concerned, we should be quite confident that, in fact, that will move forward very quickly because they've been so starved of investment. And the good news for all of us who are using the railways and all of us as citizens of this country is that A, it's going to really make the railway experience much nicer, and B, that the economic and social returns from those projects are going to be very high with strong multiplier effects.
Well, that's the Minister of State for Finance, Jayant, saying that he expects things to move very quickly on the railway as well as the roads front, and he expects a pick up in the investment cycle this year itself. It's time now to shift focus to the spectrum auction. After a big bang day one in which the government received bids worth 60,000 crore rupees, demand for spectrum has fizzled out, or at least has been on the tepid side on day two. Only bids worth 5,000 crore rupees have come in through the day, taking the total bid amount of the last 2 days to 65,000 crore rupees. Malvika joins us now with all the action. Malvika, 60,000 on day one and another 5,000 on day two. Which is the band that's seen the most activity, and what are you now picking up in terms of the road ahead?
Well, as far as maximum activity is concerned, 900 megahertz spectrum band on expected lines saw maximum bidding. The reserve price for this category has exceeded for 45%. And now companies like Bharti Airtel, an idea would like to are coming up for renewal, are particularly interested in bidding for 900 megahertz band of spectrum. And that is one of the primary reasons why we are seeing such activity. And this is also a spectrum band which has attracted interest from companies like Reliance Jio, Tata Tele, Uninor and Aircel, who are looking for incremental spectrum since this is the most efficient spectrum band. But in addition to that, 800 megahertz band spectrum, 1800 megahertz band spectrum and 2100 megahertz band spectrum also saw some activity, and overall the reserve price has increased over 33.35%. But interestingly, demand for 3G spectrum remained muted, and there was very little bidding in circles of Delhi, Mumbai, Karnataka and Andhra Pradesh. As far as the bidding amount is concerned, while 5,000 crore rupees in comparison to 60,000 crore rupees on day one seems to be a low number, sources in the government seemed very satisfied, and they expect aggressive bidding to continue as far as 900 megahertz band spectrum is concerned.
All right, Malvika, appreciate you joining us with those details. So that's day two, 65,000 crores in bids coming in for the spectrum auction. From one auction to another, the second round of the coal auction also underway. Initially 20 mines were supposed to be auctioned, but now 14 mines are up for grabs, with 2 going under the hammer today. Bidding for one of the mines in Jharkhand and one in Orissa was completed. Anshu joins us now with the latest. Anshu, who's won those mines?
The most important coal block, Mandakini, which has the largest reserve of 288 million ton, was bid at 650 rupees per ton, and interestingly it has been won by Mandakini Mining and Exploration and Mining Company, which is a JV between BC Jindal Group, Jindal India Thermal Power and Monnet Ispat. This coal block will be utilized for the power plant which Jindal India Thermal Power has in Angul district of Odisha, and Monnet which also has a power plant in Odisha. Proceeds from this auction of Mandakini coal block alone will fetch 18,720 rupees to the state over the 30 years of mine life. The other players in this in the race for this Mandakini coal block for the power sectors were Adani Power, GMR Mining, Jindal Power. The second coal block, which is Meral in Jharkhand, was won by Tirumala Industries, which is into steel sector, and it won at 727 rupees per ton. This will fetch the state government 920 rupees over the mine life of this coal block. So both the two coal blocks have been bid out, and it's the highest revenue in on day 2 of coal auction. Back to you.
So successful second day as far as the coal auction goes. Thanks, Aranchu, for joining us with all of those details. Now, unseasonal rainfall has already wreaked havoc on most of the rabi crops across the country, and private weather forecaster SkyMet expects the situation to worsen, is forecasting another big spell of rainfall on the 8th and 9th of March. Not just that, SkyMet believes winter will extend till the end of March and could spell doom for rabi crops.
And that's the SkyMet view. And what does the Met Department have to say? Joining us now is L.S. Rathore, the DG of the Indian Met Department. Mr. Rathore, appreciate you joining us. We were speaking with SkyMet, and they believe that there is likely to be another big spell of hail and perhaps heavy rainfall on both the 8th and 9th of March. What is the Met Department's forecast, and how badly is this going to impact the crops, which have already faced a fairly aggressive hit just last week?
Well, there is another western disturbance likely to approach on 8th and 9th, but its impact is likely to remain only confined to the hilly region and the adjoining plains, including Punjab, Haryana, West UP and North Rajasthan. Number one. Number two, the magnitude or amounts of rainfall are not as severe, not likely to be as severe as we have experienced in the last week.
What is your own assessment of the damage caused because of the unseasonal rain and the hailstorm last week? Because most estimates, while the government has shied away from giving an estimate of the crop damage just yet, but we are given to understand that it's caused significant damage, especially for wheat, for potatoes, for mangoes. What is your own estimates about crop damage at this point in time?
Well, the rain at this point in time, I wouldn't call it as unseasonal, number one. It do occur. In meteorological parlance, rainfall is not unseasonal, but in three aspects it is unprecedented. Number one, its extent right from Jammu Kashmir, Himachal, Uttarakhand, Punjab, Haryana, Uttar Pradesh, Rajasthan, Madhya Pradesh, Gujarat, Maharashtra. So it is fairly large spatial domain. Number two, even within the state boundaries, its distribution is widespread to fairly widespread. And number three, amounts are significantly higher in the sense that the hills region, they have got moderate and heavy to very heavy in some places, isolated. And so also in the plains, including Punjab, Haryana, West UP, parts of Rajasthan, including Maharashtra. So therefore, it definitely has a negative impact on some crops, no doubt about that, but I think there is some also beneficial aspects which are to many of the crops, which are particularly late sown crops. But if you try to take assessment of the damages which have been caused, yes, all the field crops, including vegetables, have been impacted in some pockets. Because of less because of heavy rainfall, but more because of strong winds. Because the early sown wheat or mustard, they are in a fairly advanced stage of its life cycle, and so lodging has taken place.
So how much more damage do you anticipate, sir? Sorry, how much more damage do you anticipate now that we are likely to see another spell on the 8th and 9th of March, and we're also being told that winter could extend now up until the end of March? So what damage can we expect on account of both these issues?
Well, extension of winter, I wouldn't call it extension of winter, but temperatures are likely to remain below normal, yes. And it is good for some crops, particularly wheat. It is very good for wheat. Longer the temperature remain cooler, better it is for wheat. And so also for some other crops. But it's always a mixed crop as far as agriculture is concerned, because the meteorological requirement for different crops are so varied in nature. It is different for horticultural crops, it's different for plantation crops, it is different for crops which are at different stages of life cycle. Early sown crops are impacted in a much different way than the normal or late sown varieties.
So if I could ask you, sir, because this is a matter, I understand that, sir. We're running out of time, unfortunately. So let me end by asking you, because this was a matter that was brought up in Parliament, cutting across party lines. How concerned should we be about the state of damage as far as crops are concerned, crop production is concerned, and the likely impact? Are we overestimating or underestimating what has happened on account of the rainfall as well as the hailstorms?
Shireen, let me tell you very honestly, it is very difficult for anybody, any agency to work out, estimate in such a short period of time. So the quantitative assessment is really difficult to make, and in my sense that some of the areas damage has occurred, but it is being overplayed by some.
Well, that's the Met Department's forecast. Another spell of rain expected on the 8th and 9th, but perhaps in some parts of the country the concerns are being overestimated is the Met's viewpoint. But on that note, it is time for us to wrap up this edition of India Business Hour. And before we end, once again, a big thank you to all of our viewers for continuing to trust CNBc TV 18 for the 15th straight year on Budget Day and ensuring that we get the numero uno position. From all of us, goodbye. Many thanks for watching. Happy Holi.